there's a big problem with pension funds in our country, right? A lot of them are underfunded.
Yeah, you have this great chart here, so the funded ratios by state.
Yeah, and you notice like some of these ones that are really in trouble, like Illinois, Kentucky. I mean, these are less than 60% funded. That's a problem. It basically means like in the coming future decades, they have all these retirees and they don't have enough funds to pay them right now unless they really jack up their performance. And part of this was because of, just poor asset allocation. Part of it was because of very low interest rates for like a decade, because a lot of these pensions rely on fixed income because they want to invest in like quote unquote safe assets. But when bonds were paying like nothing, they really suffered, these pensions. So they started to take on leverage and started getting riskier stuff. And, a lot of them could probably use an asset that compounds like at 50% a year in the last 5 years. That'd be a good asset. And so they also have very long time horizons. And so that's another thing why pensions, they have a ton of money, trillions of dollars, and they have long time horizons. And so even a small allocation for a pension, these are likely long-term investors, and they could really benefit because obviously we know that Bitcoin short-term is volatile, but over long periods of time, it outperforms. And so these pension funds are really interesting. And we just seen the first, like the Wisconsin and then Michigan with a smaller position than Wisconsin. But the story is that they're increasing their allocation size each quarter. It's a really important trend.